Hey, good morning, Josh.
Good morning, Richard. How are you?
Looking good.
Yeah, thanks, man. And appreciate the flexibility. I mentioned this offline, but obviously a new setting. I had
Yeah,
a meeting early this morning for the 9 to 5. And so rented out a little private room in the corner and the show must go on.
that's awesome. That's awesome.
Yeah. You having a good week?
I'm having a great week.
Yeah. My birthday, my birthday is this weekend, the
Okay.
28th. I believe that's Monday. And I've been traveling since this past Monday throughout Texas driving around. So I'm ready for a couple of days off. And I don't know if I can say this in the podcast, but a beer, man. I need that.
Beers are good.
uh,
Happy
yeah.
birthday.
Yeah. Thank you very much. I think I kicked off our last conversation, and this is just to kind of get the wheels turning a little bit, man. When we
Mhm.
spoke last time, this was pre Super Bowl. Did you have the chance to watch that?
I did watch a little bit of it. Yep. And
Yeah.
it paid off. You always want a good game, and that was definitely a good game. The the first half, you really thought, oh, it's over for Mahomes and the Chiefs, and then they just came back. So
Yeah, he just zombied out into the second half. I mean, yeah, that was amazing.
amazing those changes, those cycles.
Oh, I see what you did there. Cycle's nice. I'm gonna share this, man. I joked in our last conversation, and then the Hustle. Shout out to the Hustle. They kind of put a joke here in the bottom of their article. But I asked, "You think we're gonna see any crypto ads?" I mean, NBC, Fox, they had a huge year last year. They had another huge year this year, and I guess I only bring this up because as I saw the numbers, I was kind of baffled, man. Like this is a lot of money being thrown around. First, to highlight, no cryptocurrency, no crypto companies had any commercials throughout the Super Bowl. I think we called that. The other thing, and the reason I pulled this up, take into account pre and post game ad revenue, and then throughout the game, ad revenue last year, $636 million. By September of this year or last year, Fox had already sold 95% of this Super Bowl ads and sold some of those spots for north of $6 million for 30-second slots.
I
Just
predict
those are
that
crazy numbers to look at, man.
next year, this time we'll be talking about prohibition.
Mm. That's
So anyway, here's the connection, right? If this, crypto in 22 is to crypto today, what's,
Mhm.
booze in 24 going to be to booze today, right?
Mm.
Booze was the big theme of the Super Bowl.
Yeah, totally.
Crypto is gone, it's just gone.
It
Uh,
is, man.
we went to a startup conference this past month in Tampa, and last year it was all crypto. This
Mm.
year, not a single booth on crypto.
I, I
It's
mean, has any
uncomfortable. I was calling the froth, but to see it go from, you know, everything to nothing in a 12-month period, it's amazing to see that. I've seen it many
Mm.
times in my life, but still it's like, wow. I can't
Has
believe
anything
how caught up in things we get only to completely, have them gone 12 months
Mm.
later. It's strange.
I can't say, and this is just because I'm shooting from the hip here, so maybe you can help me out. But has anything ever shown up on scene with so much heat and momentum and then disappeared like this? I mean, like a
Yeah,
meme stock,
I know.
sure, but what any other broader example?
You're young, Josh. It's been happening. It happens over and over again. And you see it so many times, and you start to realize that it's actually just a kind of a marketing thing. It's a supply and demand, retail
Mm.
cycle of producing product that you got to move, and then you move it and you deplete your inventory, and you move on to the next thing.
Mm.
So
I will. We'll bury the crypto hatchet until it resurfaces, and then I'll be the first to bring it to you. I do. I mean, that's me getting the ball rolling with the Super Bowl is not usually our starting point or our jump off point. I will do my standard sort of temperature check, and I'll give you some numbers. But this is an interesting one. I'm showing a very broad list of assets and tickers and things that we could be tracking. Here on the right are the year-to-date changes, and you see a lot of green, man. S&P's up a little over 4% for the year. NASDAQ year-to-date 10% up. Bitcoin's up 45% this year. Ethereum 36% year-to-date. I have no major Fed announcements or firings or price drops. I can't remember. I was trying to go through my notes last night. I can't remember the last time that we just had like a normal standard temperature check. And that's exactly what this is, man. I mean, we're wrapping up February. How are you feeling?
I'm still leaning bullish on the year. I've said that we're going to see a lot of volatility. It's like it could be up 50% or down 50%, literally. Like those are the extremes. But in terms of seasonality, the third year of the presidential cycle, I mean, now through June are pretty much as bullish as you get seasonality wise.
Mm,
You've seen surges um, in liquidity and in sentiment and all kinds of things that indicate, that there's more upside from here. But yet we're really looking down the barrel of serious, um, issues in our economy and in our world. So there are considerable risks. We saw over the past couple of weeks, the inflation genie isn't back in the bottle,
mm.
and markets are repricing that right now in light of some of the recent data. So it's a tough time. And like I said, I'm leaning bullish. I think this is a seasonal correction here in the month of February, but I'm a hawk right now. And just in terms of like keeping an eye on things, because I think, it's one of those times where you just have to be very attentive and very vigilant,
Mm.
or, tune it out altogether because you're on a, multi-decade long horizon.
Yeah.
But
Um,
more of a time to nibble than to exit.
mm. Speaking of nibbling, I'll back up, and I do want to ask a question around just a recent feature or capability launch that you had. But as I read through one of the more recent newsletters you sent out about this capability launch, I was thinking about like our journey as an investor, and you may have mentioned this in the newsletter, but um, you know, young in your teens or pre-teens, but definitely in those teenage years when the idea of like building wealth is just surfacing. I think one of the first things, and I hear my brothers, and I said this myself and posted it on social medias and stuff, is the idea of like, the average millionaire has at least 7 streams of income. And I think as you grow and you mature in your investing model and at
Mhm.
just as the investing which in your wherewithal matures, I think that idea transforms some a little bit relevant. And this is what you hint at here is need to be diversified. And I'm going to share with you my screen here. And let's see. This is 3 days ago now. We're doing this on the 23rd. So 3 days ago now, you launched this new feature in the app called a diversification score. And I had sort of a twofold question for you. One, you kind of talk about this misnomer, this misunderstanding, this misinterpretation of the idea of being diversified. So I wanted to maybe just have you unpack what does being diversified mean to you? And then the second piece to this is you've launched this new capability. Can you maybe show or talk through the use case? Like why was this important? Why did we launch this? Just kind of talk to me about what we're attacking here, if that makes sense.
I mean, look, it's pretty simple, right? The markets, individual investments, individual return streams, if you will, go up and down, have
Mm,
volatility, right? And that's literally why we get paid in the markets, is because of that volatility, that uncertainty, and we bring our capital to the markets to help, share that risk, and that's what we get paid for. So you're going to have this volatility, this uncertainty. You can't get around it. And the way to build a portfolio is that you combine assets that, move up and down at different times, not all, up and down at the same time. And that smooths out your overall, ride up the middle. I actually have an old slide I can show you here briefly. Let me find this. Here it is. Yeah, so I'll just put this into slideshow mode from this slide here, and you'll get a little bit of an idea. But this is the overall portfolio line of 12 stocks, okay?
Mm.
And you'll see now the individual stocks kind of flopping around over this line, over and around, up and down around this line. These are the 12 stocks, 12 individual stocks. Some are up, some down, different times,
Mm.
et cetera, right? But overall, they all add up together to that smooth ride up the middle. So the diversification score is basically telling you how much smoothness are you getting, up the middle of the fairway there when, you're hooking, you're fading, or what's that called when you're really slicing, right? Your investments are hooking and slicing all over the place, but your portfolio is down the middle of the fairway. And so that diversification score is giving you a number that's telling you
Mm.
how much smoothness, how much control are you getting? How much hooks and slices are you eliminating in your portfolio as a whole? And I just think it's so critical to focus on your portfolio as a whole. Because, just look at these charts right here, Josh. Tell me, like, if you were in one of these stocks, right? You'd be going, oh my God, do I have to do something here? The stock is not doing what I thought it was supposed to do. And you've got 12 of those, right?
Mm.
And your mind is caught up in 12 different, you know, um, attempts to understand things, right? And to comment on it and to second guess yourself or, to say you were wrong or that you're a genius or whatever, right? But all the meanwhile, you got a smooth line up the middle of the fairway here.
Mm.
So what if your mind is just on this? How much noise does that eliminate? Right? This particular investment, you're going, oh, what a dunce. I should have gotten out back here. Right? No. You got 12 investments. Your goal is to have all of them add up to a smooth, ride down the middle of the fairway.
Mm.
So that's the idea of the diversification score. The higher, the better. It's really like the more compression, the more smoothness, the more centrality, however you want to think about it. You're not hooking shots over to the left and slicing them over to the right. They're all adding up. It's like best ball, it's like 12
Mm.
play best ball.
Is this
One
diversification
shot down
score?
the
Is
middle of the fairway, right? So, yeah, you're not going to have the, 100% gains, but you're not going to have stocks going to zero, right?
Mm.
Or maybe you'll have one of each. So that's the idea of the diversification store. Really gives people a way to kind of see how much compression, risk compression, diversification they're getting in their portfolios with one number, but then also to just help focus the attention on the portfolio as a whole so that you are not jumping around like a jumping bean on 12, 15, 20 different investments, trying to explain all of them in your mind when really, the fundamental thing is that markets are uncertain and have volatility and you can't explain it. Okay.
Mm.
We always
Super, super
wanna
helpful, man.
we always wanna tell a story in our minds, right? We want there to be a reason for everything. There's
Mm.
no reason for this volatility and uncertainty. It's unexplainable. Okay. And we're just in there to help manage it and get paid for managing it. And the
Mm.
diversification score is a great way to um, see how much benefit you're getting of reducing that overall volatility by combining the right assets together.
Uh, Managing the flow that's out of our control. It's interesting that you said that in sort of a flow of things. I'm going to put a pin in
Mhm.
that because that's kind of how I want to close today, which is interesting. One more question on this diversification score. Is this a common, like, having a diversified portfolio is something that you and I have talked about and typed in, diversified. I mean, you get millions of results. So that's not a new topic, but this diversification score and having something that's tangible to
Yeah.
track and to is that new or is that common? Like,
I don't know. I haven't seen
yeah,
it before.
me
And it
neither. But as you
seems
say it, I'm like, how does this not
I
exist? Like,
know.
of
How does this not
course, it makes a
exist?
ton of sense.
And everybody that we talk to is like, "Yeah, no, I know I'm supposed to be diversified, but I have no idea how to do it." So now
Totally.
you actually have a way, a number that you can look at to help you actually move towards a diversified portfolio in a systematic way.
Yes, sir. What does the perfect world? What is that diversification score? Like, what is the target number?
I mean, I like to see at least 30%.
Got it.
Um, if I can get 40%, 50%, that's dreamland, but I think,
Very
25,
helpful.
3% somewhere in there is a good target.
Got it. I will shift us gears. I know we stayed on that one a little bit longer. That was a cold drop. Like I said, when I read through it, I'm like, how? Of course, like of course. So yeah, appreciate the summary on that.
Mhm.
Um, Here's an interesting one. I'll share my screen first, and then we'll get going on this. Back in early 2021, you and I had a frenzy. I mean, a field day on a couple of these companies, and this is called the IPO class of 2020 and 2021. And I mean, we stomped on a couple of these. Um, Since then, I mean, basically, I'm showing a graphic. There's 3 by 3, so 9 companies that took went public in the last couple of years, and then almost immediately just got robbed. And I pull this up, not to crap on these companies. In fact, I mean, we've looked at these numbers from there. We talked about a couple of these others, but my question is this the norm? Or, we've talked about this couple of years, Ethereum and Bitcoin, there's just so much money in the market and companies are being invested in, and there were SPACs and companies were going public, and like it was things were so frothy. And in that moment, these companies go public and they were almost at the top of the wave, just surfing on this thing. And then as money depletes, and now we're on this spiraling session, you do see all the cryptocurrency, like we discussed at the top of the call, and you see this here. So my question is what I'm looking at, is this a result of the market we're in? Like we just saw a frothy market. These guys timed it right, got the right bet, and then we're on this spiral. Or is this a typical IPO form? Like a company goes public, they see a spike, and then everyone tries to sell out. And so there's this dribble. Is this
No,
standard for an
this
IPO?
was more, I would say this particular display here that you've got was more of a, uh, driven by the market dynamics that were going on at the time.
Hmm,
So not all IPOs follow this pattern, but if you were IPOing in late 21, then, you know, yep. And this is part of what I was saying before, it's this manufacturing process, right?
hmm.
So venture capital, private equity, they had products to move. And so they were moving their product, right? And it was obvious that there was too much product. but and it was like, we got to move this quick because the doors are closing. People are going to be leaving the store.
Hmm.
And so that's what you get.
Do you I mean, just because we track and talk about building this portfolio, do you have any hard rules against like company from entry to the market to the first 6 months of IPO, after IPO? I don't even look at it. Like, do you have any wireframes,
I've
or are you
never
ever
really
interested
been a
in?
big fan of IPOs. I feel like they're really heavily gamed and they're
Mhm.
part of this kind of, getting the attention of the public and distributing the shares of the founders or the private equity company. So it would be very rare for me to invest in an IPO. It'd have to be something that I was just really excited about, thought was going to change the world. And I haven't seen anything like that in a long
Got
time.
it. Yes. Um, at the top we joked about, and I even asked, like, has anything ever shown up in the market that then disappeared? At the moment, what that feels like it could potentially be, and I'm not saying it is. In fact, I would lean the other way, and I think that there's some validity behind this. But at the moment where we're at, the artificial intelligence and machine
Mm.
learning world seems to be just accelerating at warp speed. And where this end, maybe that's going to be my question as after I give you this landscape overview, but like where, are you afraid of this and where does this end? I'm going to show you just sort of some of the activity that we've seen over the last couple of weeks. And I've got some highlights that I'll show you, and then I'll ask you a couple questions. Um, we talked to, I think that's 2 weeks ago. We talked about Microsoft and their billions of dollars of investment with a B into Chat GPT. This is a tweet from their CMO and corporate VP where they released a new AI powered Bing. They called it New Bing. And within 2 days, they had over 1 million folks on their wait list. The app for Bing, the phone app, saw like a 9 times download rate, like to the day prior from this announcement. So these guys are skyrocketing. They've got something that's, seems to be getting pretty juicy. I'm going to keep trucking here. This is Microsoft. Amazon, obviously the Microsoft Chat GPT is going to live in Azure. This is Amazon, and this is 2 days announced their face where they're going to start offering these AI ML capabilities to anybody building in the AWS platform or Amazon. So you've got Microsoft in the mix, you've got Amazon in the mix. Here's Alibaba from a few days ago announcing that they have a Chat GPT rival. Their stock skyrockets. Alibaba from outside the US is entering the market. This is a message from Google. He sent out, their CEO Sundar sent out this email last week where they have this AI internally. Let me find the name of it. I wrote it down. Bard is the name of it. Right. And he asked all of his employees to spend 2 to 4 hours of their time in Bard. And I loved this. Let me see if I can find it on the fly. Here we go. He reminds staffers that while Google has not always been first to release a product, it has never hampered our ability to win. And with Google in the mix and they have lots of money, they're going to get in the mix on this thing and have something to market really quickly. I'm getting along with all of the big players here and billions of dollars being thrown at this. Where does this end? Are you excited? Are you fearful? You have any predictions as to where this AI race ends up?
Certainly not where the media headlines suggest it's going to end up, right? There were all these wild stories out these past couple of weeks about the psychotic, AI. I forget what the name. Sydney, was that the name that
I think you're right.
Itself, right? No. Anyway, I've always said this is actually not intelligence. It's artificial intelligence. It's a simulation. And it's just basically an algorithm regurgitating things that it's found in the data that it's been fed. It's not intelligent, but it is a very powerful tool. So there's nothing to be afraid of. It's just another tool. It's like when the word processor first came out, or when, search first came out. Those are powerful tools that change the landscape. This is definitely going to change the landscape. It's definitely going to lead to some advances, but it's not going to take over the world. It's just another tool, right? That's how we got to see it. Figure out how to use it. People use it, right? It doesn't use us. And yeah, seen it many times.
Like crypto, this is
calm down and get to work.
It's so damn hard. I like crypto. This is one that I'll keep tabs on, man. Me living in the AWS tech space, I work with SMBs in my 9 to 5. Like this is something.
Yeah.
Every morning and every afternoon, I have like an aggregated list of things I could ask Chat GPT, and that's what I do in my free time now. It's just like plugging in questions. So I'll definitely keep tabs on this. There's really cool, like you said, if handled the right way, there's really cool applications in niche and protocols that could be attacked, summarizing articles. There's some really cool
shit used it already to do things that we tried to do before that we couldn't do. So they're simple things like pulling tickers out of a web page. So that's a natural language processing, and that's what Chat GPT does really well, NLP. And and by all means, we're going to use it. So skip the headlines, figure out what it can do for you, how it can make, you more productive,
There you go.
your life better. Don't like follow it as some kind of like oracle. That's not what it is. It's a tool, right? It's a tool for you to do better work,
Mm.
period.
I'm uh I'm looking at my time, man. I know I've got one more for you, maybe two. We'll see what I'm doing. Last week when we met, share my screen with you. We talked a little bit about the debt ceiling. Since then, you wrote, I mean, this is an in-depth newsletter on it, which is really, really awesome. But in our interview, you mentioned Ray Dalio's book, and you do it again here in this newsletter. In fact, I pulled up the principles for dealing with the changing world order just so I could re-show that. I mean, it seems like this book, and just total transparency, I haven't read it, but I downloaded it after getting your newsletter.
Mhm.
Um, it seems to have hit home for you. And in that newsletter, you show this graphic, and you mentioned, Dalio
Zoom
studied.
in on that
Oh,
graphic.
I've got one pulled up for you.
All right.
Uh, Dalio has studied economic cycles for more than 500 years now and identified 18 stages, the rise and fall of the economic power. Here's those 18 stages
Right.
zoomed in. Um, we're obviously, and you mentioned this in the newsletter, on the down swing of this. And I can't remember the terms you used, but it was like, I don't want to make it up, dark and something. But the what I wanted to call out, this is a verbatim from your newsletter, and then I'll have you unpack this. But there is a silver lining. While this economic cycle is natural, it's inevitable, we've accumulated enormous amounts of wealth and power, and we've got a lot to rebuild upon if we manage this decline phase cooperatively and intelligently.
Yeah.
This is a very scary and sad, like this strikes fear. Even just seeing the graphic strikes fear in me. And so my
Yeah.
question is maybe twofold.
Mhm.
What,
Right.
what does that mean? How do we handle this? And handle how do we handle this cooperatively and intelligently?
So, I mean, what we're looking at here is a cycle of economic empires. So, and it's basically, look, you start out kind of lean and hungry, and you're all working together, pulling in the same direction. Things are growing, you're leaving things better for your children. And then we all start to get complacent and want to make sure that, our children never get hurt and never suffer and never have to go through any hard times. And then we gradually decline, right? And it happens over a few generations. It can be 60 to 80 years, and it repeats, throughout history over and over and over again. It's impossible to avoid. But when you're on the decline, which is where I think we're at in the United States right now, we've basically been running the world for 80 years since the end of World War II. And now we've got large debts. We're printing money. We're at each
Yeah.
other's throats. We have weak leadership. Those
Mhm.
all pretty much sum up the state of the United States today. And, if we kind of don't see it for what it is, that we're in the midst of a decline, that we've borrowed too much money, that we're not producing enough anymore, that we're not as creative as we used to be, that we're infighting with each other. If we don't see that and start to make adjustments so that, we can prepare for the next rise, it can end very badly, right? And so what I look at, Josh, there's so much, going on online of pitting, one group against another. And I think we just have to really start to look past that. We really have to start to say, no, how do we work together instead of always dividing each other? So that, and dividing is really about controlling both, parts of the divide. So we are in a decline in the United States. We do have large debts. We are printing money. We have internal conflict. We have weak leadership. We haven't lost our reserve currency. We're not in a civil war, at least not, physical civil war. I'd say we're in a social civil war. But this is where we're at, you know, and it's natural. It's normal. It's a cycle, and we can get through it if we start to address these issues, not be at each other's throats so much, start to work together. Don't let ourselves be manipulated by these, media and economic powers that really just want us kind of on the sidelines and not really solving the problems together because they just want to maintain their own power. And that's where we're at. So I think Dalio's done a wonderful service. This is obviously, a theme dear to the Foundation for the Study of Cycles. What he really did here that I think is so valuable is he really kind of put more of an explanation, like a cause and effect explanation to cycles than what we've seen before. So there's been a lot of knowledge about cycles out there, Kondratiev cycles, other, attempts to really see these cycles throughout history because they show up in the numbers. When you analyze the data, you see these patterns. So he really kind of gave it the story that explains the patterns. And I think that's really great. And, he thinks China is on the rise and they're in the kind of rising phase of their cycle versus us being in the declining phase. I think he's probably right. I feel like he's a little bit too um, warm and fuzzy with China versus the United States, but I think on the whole he's right. China is in a rising phase of its cycle. Its people are more united. They're working together um, more to get out of poverty themselves and, to start to live a middle class life. Whereas most of us are like, we think we take the middle class life for granted at this point, right? It's like a birthright or something, but it's not. And we're going to have to figure out how to get through it. There's not easy answers, but I tell you, all the easy answers out there are the ones to avoid. The easy answers are just being sold for political power and economic power, and it's really not going to work.
Yeah, as you're talking, I think you hit it right on the head, man. And I couldn't find out why this struck a chord for me as I processing your email and reading it. I mean, it's obviously scary, but what we've seen and discussed this, and I think you just hit it right on the head. And I'm just processing this as you're talking. But it's one thing to you guys do this with FSC, but when we see a cycle or we hear about something and we see the graph and we hear the numbers, at the end of the
Right.
day, we're sort of putting our face in the graph and in the numbers. But what Dalio has done here and what you do and what we're doing at the moment is taking that graph and those numbers and double clicking or zooming in and saying, now at each of these phases and stages, here's where we're at. And I think seeing that and seeing the journey that one would take or that we would take, but I'm looking at this new order to new order, the rise which we've hit, and this, I mean, how he's explained it in the wrap. It's I mean, it's damn good. Is the point? It's damn good.
I was amazed
Um,
that I hadn't really read the book before, and the more I read it, the more I was like, "Wow, this is an incredible contribution."
well, you've sold it. Hopefully, he sends you some affiliate credits for that because I'm in on it. Okay, and this may be something we cut out, man. I didn't bounce this off of you, and so I'm winging it. Yesterday I was on an email thread and I saw. Whoa, can you still hear me? Okay.
Yes.
Okay, sorry about that. I dropped the headphone. Yesterday I was on an email thread and I was CC'd. It sounded or looked like you're getting ready to maybe iterate and relaunch a new version of that principles course. And
Mhm.
if I'm too early to the party, you can cut this out. But I did want to just maybe poke around and see if you had anything that you were willing to share with the broader team.
Well, I think the 7 Principles course was well received by many people, and we made an attempt to get it out to a wider audience on a learning platform, an e-learning platform, and that didn't really work out that well, so we're retaking possession of it and updating it and just gonna distribute it ourselves. So, I think it's a fantastic course. Hundreds of people have been through it, and they've all raved about it. We haven't had one negative comment. There've been things that people wanted added to it, so we're working on some of those things, but just bringing it up, to date for current times. There's timeless parts of it, and there's, um, you know, current conditions parts of it, right? So obviously, the current conditions have changed from where they were, 18 months ago, but the timeless principles remain, and we're building around those and then just updating them for current conditions. So excited about it. And then also just building upon it and adding some other services to further support people who go through the 7 principles course and then want to take it to the next level.
Beautiful. Man, I've co-sponsored it, and so I won't go down that rabbit hole many times, but I will note, uh, last year as we were getting into that, and even on the third party platform, I think I bought like 4 or 5 versions for just buddies of mine that I went to college with. And so the point is, I couldn't recommend it enough. The foundational principles that you're talking about here and how we try to double click on and unpack here. I mean, crucial, man. And just like this correlation calculator that we discussed earlier, it's like, of course, I'm
And
really, really
that's
looking forward
another
to see
thing,
what you get out there.
FINIAC has come a long way since 18 months ago,
To-
right? So
Totally, bro.
being able to integrate the diversification score into a portfolio building, course is another reason to update it.
That's it from my end, man. I held you 40 minutes today, which is a little bit longer than we typically go. As always, I'm extremely, extremely grateful for the opportunity to chat with you and for your time today, man.
It's always a lot of fun, Josh. Happy birthday, and see you in a couple of weeks.
Thanks, man. Cheers.